Wednesday, May 17th, 2017, Monaco 64, home of alternative economics and contrarian views. So it's 9:30 p.m. London time. The stock market in the US is shut. So we had a very significant day on the downside, of course, in the US and throughout Europe. So the Dow finished down 372 points, or down 1.78%. S&P 500 finished down 43.64 points, or 1.82%. So the Dow settled at 20,606, and the S&P at 2357. And this was the biggest move since March 22nd. And I'm going to read here a little bit from the NASDAQ website on March 22nd, 2017. And it's sad. In fact, Dow Jones and S&P 500 slipped more than 1% for the first time in more than 100 trading sessions. So that was back in March. And it says, excuse me, the Dow Jones decreased 1.1%, or 237 points. S&P fell 1.2%. And yeah, at that time, it was the biggest move since September 2016. So it's been this is the biggest move we've seen in 8 months today in the stock markets. Of course, all the mainstream media, even Zero Hedge, is saying it's because of the Trump and they say, Zero Hedge says, Trump turmoil sparks biggest market crash in 9 months. Maybe, but this has been coming. We could see this coming, looking at even mainstream analysis like from Citibank, Morgan Stanley, Citibank saying, that the market was the most overvalued in a long time compared to their macro, Citigroup economic surprise index. Same thing with Morgan Stanley. All the big billionaire hedge fund managers like Druckenmiller, all saying that the market is overvalued. Even though the Fed has been saying they're going to hike in June and also in September, and they hiked in March. Yeah, the market just kept levitating. But today, is a surprise. Maybe the market was looking for an excuse to sell off, but fundamentally, it's not because of the Trump turmoil that this is happening. It's because after, almost 10 years of zero rates, QE, all kinds of, extraordinary policies by all the major global central banks, the economies of the world are still heavily indebted. Growth is anemic. We had GDP in the first quarter in the US below 1%. They're predicting second quarter around 2.5%, 3.5%, but Atlanta Fed has already revised that down. We had weak retail sales recently in the US. So, and the bond yields as well have been coming off, and that's a signal that the economy is slowing down. Yeah, today bond yields dropped even further. The 10-year yield now, dropped 11 basis points today. We're down to 222. So quite far away from the 263 level. So it looks like the markets are predicting a slowdown and even a recession. Maybe that's why the Fed got a few rate hikes in. They're going to be able to cut again. Not too sure. I think the odds of them raising rates in June have gone down because of what's happening in the markets. it's going to be very interesting the next few days, you know, to see if this is a one-off, this move in the stock market lower like this. I would call it like a mini crash, you know, considering this is the biggest move since September last year. What about other assets? Well, precious metals, especially gold, did very well today, up almost 2%. We're at 1260 right now. The high is 1261.50, up 1.86%. Excuse me. Silver got up to 1705, but it's kind of struggling compared to gold. Is up a 0.25% right now at 1690 roughly. And currency-wise, the most interesting currency cross or currency pair has been the dollar yen, and I've spoken a lot about this. So the dollar has dropped almost 2% against the yen. We're now at 110.97, and the recent high is 114. So the lower the dollar goes against the yen, the more we're going to see risk off in the markets, the better it will be for gold. So that's the general picture. We need to wait for the next few days to see if this continues, this weakness in the stock market. So with that now, I just want to look at some charts. Start out with gold, a daily chart of gold. I spoke yesterday, I think, about the technicals, or the day before, about the trend lines, you know, the 2011 trend line. And here's that chart again. I said we needed to get back above the channel trend line and the 2011 trend line. And we've done it today. So that looks very interesting. So it's going to be very important the next few days, not just for the stock market, but for gold as well. Let's look at a monthly chart of gold. That's going, you know, back to the early 2000s. But you can see that trend line, the all-important trend line. The reason why that trend line is important is that if we can get clearly above that trend line and break out of that trend line, that means that the counter trend move we've seen in gold since 2011 is finished, and that we will probably have another leg up in this very long-term cyclical bull market in gold. We've had a bear market, you know, for about 6 years now, and I think it's just a correction in the bull market because we haven't made a new low in gold. So that's the monthly chart of gold. Now I want to show you just a daily S&P chart, just to show you how significant this move is. Look how, you know, that big drop here today, big red line. If you have to go back to March 22nd there, there's another big drop, not as big as today. And before that, you got to go all the way back to September, as you can see there, the big red line. So yeah, and we haven't managed to stay above that 2400 level. But again, we need to wait the next few days to see if this continues. Now I'm going to do a little something different. I'm going to look at the chart of a stock, Goldman Sachs Group, Inc. And this is a very interesting chart. Here's a monthly chart going back to 2003. You can see that Goldman Sachs topped in 2007 at $250. And then we had the 08, 07, you know, to 09 crisis, and Goldman Sachs dropped to below 60 bucks. And ever since then, you know, it's been going up. It's recovered. Since the election in November, it went from around 160, and it made a new all-time high at 255. But, you know, looking longer term like that, I know it's 255 is higher than 250, but you could say this is a very long-term double top, it looks to me. And why am I looking at Goldman Sachs? Well, because Goldman Sachs is the premier institution that benefits from this credit system, fiat money system, speculative system, the OTC derivative system, influence peddling, financialization of the economy. Goldman Sachs is it, and we need to keep an eye on Goldman Sachs as well, I think. And it topped earlier. If you look back, it topped a few weeks ago or months ago, and could this be signaling trouble ahead for the financial system? We'll have to see. Yeah, Goldman Sachs had a rough day today, which is interesting because I spoke to a friend of mine who still works in the city. He called me today. He said, the U.S. banks are, they're not as leveraged as they used to be. They're very safe. Well, Goldman Sachs today down 5%. JP Morgan down almost 4%. So that's what I wanted to talk about as well. Goldman Sachs there. It could be signaling, something, some kind of trouble ahead. I guess the people at Goldman Sachs probably would know if there's something wrong. They're the insiders, and maybe they're, liquidating some of their stock. Yeah, so very interesting day in the financial markets. Of course, everyone's talking about the Trump turmoil, whatever you want to call it. But I think this is more than just, more than something to do with a politician. So let's wait and see now till tomorrow, see what happens, see if the markets continue lower, the stock markets, and if precious metals, continue to rise. So if you enjoyed this video, please give me a thumbs up, share it far and wide, subscribe to my channel if you haven't yet. Donate to the channel if you'd like. There's some links below in the description. And also follow me on Steemit if you'd like, steemit.com. Take care. Bye.